Hello, this is Mark Sturdy with 7 Days Ahead highlights of 7 Days Ahead's multi-asset technical strategies this week, the 30th of November. Turning to our summary, you'll see that the volatility of at the end of last week has thrown a spanner in the works of many of our established positions. However, we remain, notwithstanding the short-term volatility, we remain bulls of the dollar, bears of the currencies in the euro and the sterling, and we remain bulls of the S&P 500. We have withdrawn, as you will see, both from the commodities positions, the bond positions, and the other stock positions that we were enthusiastic for last week. The reason we've stayed with the dollar and remain short of the currencies most clearly shown in the dollar sterling. Let's move to that. Here we have the failure of the sterling to make headway above 143.76 in the long-term chart, the medium-term chart, but look at the short-term chart. That anyway was under threat, breaking through these supports, and we think that notwithstanding the very short-term moves to strengthen sterling, weakening dollar, massive resistance here, we remain long of the dollar. As regards stocks, you'll see that we only remain long of the S&P 500, and that is not without qualification. There was a sharp profit-taking in the US at the end of the week, as we all know, and it's also important to note that there are a number of key reversals in play as a result. So we recommend, even if you stay long, and I think there is reason to stay long of the S&P, you should watch the supports we have very carefully. Let's just confirm that by a closer look at the S&P. This weekly support of 45.38 remains in place, and the price action, while is not happy, has yet to be significantly poor. There are key reversals. Here's a key reversal here. Here's a key reversal here. So we think we are quite possibly the market will go down and test 45.38. But it's yet, until it breaks through, we remain long. The FTSE was badly hit by it, and as a result, the bull triangle that we've been looking at has failed utterly, and so we pull back from that position from that market totally. It looks like this is going to be, having broken through this horizontal support here, good chance this is going to be tested and possibly broken. The Nikkei is. We remain bullish long term, we remain bullish medium term, but it remains within this big trading range. It hasn't broken out of the trading range, so we're not bearish short term, but it's obviously the chances of it breaking up are vastly reduced anytime soon. Bonds are in a tricky situation. We have no strong view on any of them now. The test case, the one we've been most bullish of yield-wise, bearish price-wise, has been the gilt, with the nicest form, the clearest and most structurally sound bull reversal here in this head and shoulders looks to have been destroyed by the price action here. Let's look more closely. This is price terms here. A good rally. The market hasn't yet closed above, it didn't last night, but I think it's going ahead above 26.23. It might yet rally further price-wise and pull back further yield-wise. So we are abandoning our bull yield bear price position in the gilts, and that was the clearest of all three. So you can imagine the others remain unclear, even more so after the volatility at the end of the week. We were very bullish of oil and bullish of gold last week, and now we can, after the volatility at the end of the week, we have withdrawn from both markets. Let's quickly look at the oil. There's been a big reversal here. I know it's not the end of the month. We've got to wait for a day or so, but it looks like the month is going to close beneath this resistance, this horizontal resistance, where the market failed in 2018 significantly. It looks as if it's going to fail again. That's a big failure. Here is the failure of the weekly head and shoulders reversal. That had already broken actually before the weakness at the end of last week, so it was under threat, and sure enough that's confirmed. So the whole picture is, albeit it stopped at the support with the support of the diagonal here, the picture looks very dire and uncertain. So we are out of our bullishness for oil prices, and with the gold, not clear what's going to close on the month. It looks as if the monthly close will not be above this possible bull triangle. Here's the triangle again. The other side of the triangle is here. We were up for a bullish situation there. That's all been thrown on its head by the close of last week. False breakout. And so we're out of gold. We see nothing clear in gold. Thanks very much.